Good evening, traders. Welcome to your 7-minute market update utilizing technical analysis to predict direction based on human emotion. Today is June 13th, 2012. Not too much to talk about, but let's get started. This here is a chart of the SPY, which is the ETF that tracks the S&P 500. Let me just load up my drawings here. So far, everything looks as planned. Let me kind of just zoomed in here. So again, we're unable to close below this upper trend line here. Whoops, let me get my drawing thing in here. This upper trend line here, we are unable to break down from this upper trend line here. Basically, we have this up move, and now we have this very messy consolidation pattern, okay? But this is definitely a bullish consolidation pattern as expected. Now, again, the consensus was that we either retag this upper trend line here and then we get a bounce up, or we just have this bullish consolidation, which is what it looks like today. Yes, in yesterday's video I said if we had a pullback today, then that definitely would fall into the bullish consolidation pattern. Okay, even though this is a bullish consolidation pattern, you have to remember that Greece has an election this weekend. Therefore, anything can happen. A lot of analysts are expecting a sell-off on Friday because nobody knows what's going to happen over the weekend. However, even though that was true, even if that were true, if we can hold this 20 moving average here, meaning we don't close and confirm below it. Remember, you have to close and confirm below this 20 moving average, and or close underneath this upper trend line here. Then basically say we get another update tomorrow, for example, just like yesterday I said that we would have a down day possibly, and then we got that, and then say tomorrow we get an update, and then on Friday we get a down day because everybody doesn't want to hold over the weekend. Then let's just say we get some good news over the weekend per the election, then on Monday and Tuesday we should have a spike up and possibly into this 135.44. So I'm gonna have to be patient here. Again, I'm not saying that we're gonna get into this hit this 135.44 level. All I'm saying is if we do, there's going to be a lot of resistance here. We have the 618 Fibonacci retracement line here. We have this 50 moving average. We have this calculated level, which is at 135.44. So there's a lot of resistance here. We also have these two pivot points here, drawing this resistance point right at this 135.44. So it's going to be between 135.44 and 136.10. I'm probably going to jump in at 135.44. I'm going to try and get in early to the party just in case this market turns around. Again, this is a counter trend. If it does move up, it'll be a counter trend movement because we are still in a confirmed downtrend, and there's nothing telling me right now that the trend is changing. Okay, so this is the SPY. Okay, so in addition to that, as you can see here, I've been saying this since the weekend. This is the week of options expiration. In case you haven't seen the previous video, it's just going to be a very volatile week, and sure enough, we're just getting down, up, down, up, down. This was Monday's candle here, and then we have this huge up candle, and now today we have this down candle. We actually opened, we gapped up, and we went all the way up here, and then we closed all the way down here for into a negative number, which is a 0.85 on the negative scale. So this is the volatility the options expiration week will give you. So you just really have to be careful. Intraday trading, however, is a lot more fun because it's a lot more volatile. But in a swing trade, people are just getting stopped out left and right, and that's what the institutions really want. And if just to kind of show you what I mean about institution game playing and how I mentioned in previous videos, when you have Fridays, Mondays, and day after or day before holidays, what you're going to have is low volume, and when you have low volume, it gives the institutions a chance to prop up the market simply because there's not enough people selling. And but like I also said, if there's a lot of fear in the markets and everybody's selling, there's nothing the institutions are going to be able to do to stop it. However, in this case, in this scenario, today was low volume. Today's volume was 172 million. Our average is 150, so it was a little bit above average, but in comparison to the previous days, today's volume was pretty low. So let me just kind of give you a little example of what the institutions can do. Okay, this here is the SPY, the ETF that tracks the S&P 500. The only difference is this is a 10-minute chart. Okay, so today we actually see we closed up here, we gapped below here. Okay, so this is from this area here. I don't know if you guys can see these lines, but from these two lines here, let me just zoom in to these two lines here so we just know what today's action was. So let's kind of just zoom in here. Now what you can see is we have this huge up move, so we're in a positive, right? And then we come back down, we create this so let's just start from the top. We have this doji candle. We come down, we create this bullish consolidation pattern. I'm sorry, a bearish consolidation. We come back down. We have this reversal candle. This is called a piercing reversal candle. We talked about that in previous videos. We come all the way up, and now we create this shooting star candle. We trade trade sideways, and then we start coming back down again. We consolidate, we come back down all the way down here, and then we consolidate for another down move. However, the last 10 minutes, as you can see, this huge green candle, the very last 10 minutes of the market, open, the institutions propped it. Now, just keep in mind, this candle's low was 131.63. The high of this candle was 132.11. That's, a huge, a huge pop up here. No retail trader, which is you and I, or if you're watching this video, you're probably a retail trader. There's no way anybody, any single person, or even small hedge funds can actually prop the market up this high, this fast within the last, and I believe this was within the last 3 minutes of the market. Let me just look at the 1 minute. Yep, here we go. So if you look at the 1 minute, so we have 1, 2, 3, 4, 5, 6, 7, 8, 9. Actually, it was 9 minutes, but we actually didn't see the big move until this candle here. So 1, 2, 3, 4, 5. So the last 5 minutes that the market was open, we had this huge volume at the very last minute, right? But we had this huge volume here. I mean, this huge candle here. We consolidated bullishly, and then we had another huge candle there. This is not retail trading. This is institutions, big firms that are buying into the market to prop the market higher. Okay, and this is institutional game playing because it's the week of options, the week that the options expire. Okay, let's take a look at another chart. This is a chart of Apple. Let me just bring up the 10-minute chart here so we have a better idea of what's going on. Again, let me just kind of just okay, so this is today's action here. Let me just zoom in to today's action. Okay, so Apple, we come all the way up again. Apple is actually in a positive, and then it comes down and basically follows what the SPY does, except except the last candle here, the low was 570.62 and the high was 572.44. That's, a $3 increase in just 10 minutes. Okay, so this is definitely institutional game playing. What they're doing is they're short squeezing. Okay, so they're stopping out all the shorts, or this is also in addition, the probability is in combination of institutional game playing, there's a lot of short covering going on as well, because nobody wants to hold for tomorrow. Okay, so that's just an example of what institutions do. I've seen worse cases, especially during the week of options expiration, but I'll show it to you the more I see it. Okay. Okay, moving on. This is the daily chart of the US dollar. Again, dollar up, market down. That's been like that for a while. Again, just a brief, history here. We had this resistance point here. We come back down. We tag this support line here. We tag it once. We tag it twice. Actually, we tagged it before we got a bounce. So this is 1, 2, 3 times, and now we have this pop-up. And what is it doing? This is actually bullishly consolidating, in my opinion. Okay, because it's still holding this 20 moving average. Can it pierce through this 20 moving average? Yes, it can. So we're gonna need to keep an eye on that. If it does tag this support level here, there is a possibility that we can actually break through and get into this 382 level. I highly doubt. But if it does, if it can get down here to this level here, which is about 81.11, and then the 50 moving average should come up there by the time it gets down there, then we should get a significant bounce off of that level here. Will we get there? That's the big question. It doesn't look like it right now because we're bullishly consolidating for another pop up. However, if we do come down and we don't get a bounce off of these two levels here, then we should come straight into this level, and I do expect a bounce there. If we don't get a bounce there, then we should definitely get a bounce at this $80.52 level, which is the Fibonacci 618. So we just have to take it day by day, and right now what I'm seeing is the 20 moving average is holding. This candle here is after hour trading, so don't look at that candle for now, but this candle here was today's candle. We hit the 20 moving average before the dollar caught a bid. Just keep in mind, again, this 85.23 level is still in play, meaning it's still a calculated level that is still valid. Okay, so there's a possibility that the US dollar can get up there. All right. All right, this is a daily chart of the VIX. Huge move on the VIX today, and it's so funny. And this is an exact example of the options expiration week, where you have this up channel. We break through, we retest this bottom trend line here. We break through this bottom trend line again. I told you we needed to confirm, right? We did not confirm. We broke under it yesterday, and then we closed under this trend line here. Today we broke above again, right? We went right into the 200 moving average, and then we pulled back just slightly. Now, in order to confirm this rising channel, once again, we're going to need to confirm, which is a close above this candle here. Okay, so if we don't get that tomorrow, right, then we might push down again. Again, this is just institutional game playing. It's just that's how it's been for a very long time. Institutions don't want to lose money, and they're the ones writing the contracts, and you're the ones buying it, and they're the ones that don't want you to be able to execute those contracts or want you to make money off of those contracts. So of course they're gonna try to whip you out of the market as best as they can. Okay. This is a chart of daily chart of the GLD. It's the ETF that tracks gold. All right, so GLD we actually popped above. We actually gapped above this for 50 moving average, and then we just slowly, we bled off, and then we caught another bid towards the end of the day. And believe that's pretty much what happened if I look at the 10-minute chart. Now this 50 moving average is now support, okay, but we need to confirm above this candle here. Actually, this candle did not. It's kind of the candle closed above the 50 moving average. So if we can get a confirmation, meaning if we can close, it's not really a confirmation, but if we can close above this candle here tomorrow, then this 160 level here, it seems more promising. And back here I had this 160 level all the way from back here, and then it was just a long ways to go, but it looks like that 160 level could possibly come into play. Now we're also going to get a lot of resistance in this gap fill. It's also this Fibonacci 618, which is the strongest Fibonacci line in my opinion, that it would have to break through before I'm going to consider this 160 level. And we're also going to have a lot of resistance here. So if we get a lot of if we can actually break through all these resistance points and get up to this 160 level, then I'll probably get my toes wet and take a short on GOD. Okay. I'm not going to go too much into stocks, simply because pretty much everything is status quo. The markets are going the way we expected it to go. So basically this is just redundant information. I am still holding on to my Walmart trade. I said I would get out at 67.21, but instead of getting out, what I did was I put an in the money stop on WMT. So if we get a spike tomorrow and it stops me out, I still make a profit. Right now what I want is this Walmart to prove to me that it's going to get another pop. Now here's the risky part. We did get the resistance up here, but what does this look like? This looks like bullish consolidation for another push higher. And I do have another level here, which is a calculated level at $70.56. So there is a possibility that we may pop into the $70.56, especially if the SPY catches a bid. If we rally into the 135 level on the SPY, then I wouldn't doubt that Walmart will get into the $70.56, simply because it is still a pretty strong stock. Right now, all stocks are following the SPY, including Walmart, so it doesn't have relative strength like it used to have before. However, I honestly wouldn't doubt that we get another push up on Walmart, at least one more push up before we head down. Now, I did mention that we would at least get a 50% retracement off of this candle here. That's definitely what we did. And I just want to make clear that this 50% retracement is normally when you're in a volatile market such as this week. Sometimes you only get 25% retracement before you head higher. So I said 50% retracement this time only because it's the week of Options X, and I know it's very volatile, okay? So I would definitely sell probably half my shares of or cover half my shorts of Walmart at this level here. I'm pretty sure we're going to probably get a bounce off of that level. But I'm just going to watch the SPY, simply because it looks like Walmart's trading with the SPY, and it doesn't look like it's a stock that much in strength. Well, it is in relative strength and relative to other stocks that are following the SPY, but Walmart for now, I'm just going to keep a close eye on it. But right now I'm playing with the house's money. If it stops me out, I still make a profit, not a big deal. If it stops me out, right now I have a stop at 20%. Okay, so if it stops me out, then I'll profit 20% off of Walmart. And if not, if it continues lower, then so be it. I'll just keep moving my stop higher and higher. And what I'm looking for is actually 40%, which is around here, and I'll be happy. Actually, if it can get to the 65.47 level, then I'll be extremely happy. But we'll see if it can even get there in the first place. Okay, so thank you very much for watching this video. God bless to you, and hopefully I'll see you in the next video.